Every year, I set some investing goals to keep the journey more entertaining and have an additional task other than just pursuing my end goal, which is to cover my expenses with my dividend income. I started investing in 2020, and at the end of that year, I set up the goals for 2021. At that time, I wanted to increase my holdings to 10, have my projected annual dividend to $150, and rebalance the portfolio allocation as I was heavy in some positions. Moving to the next year, 2022, I went a little bit more aggressive with the goals. I was officially debt-free so I could contribute more, and with a portfolio around 3.8K in value, I went for the goal of reaching a 5-figure value, 10K, also doubling the projected annual dividend income to $300 and increasing my holdings between 18 to 20. All the goals mentioned were achieved in their corresponding year, and it made the investing process more enjoyable. So what do we have in store for 2023? Well, since I do not know how the economy will do this year, I went for the conservative portfolio value of $15,000. With the amount of layoff, recession fears, and lower guidance, it could send my portfolio down. At first, I was thinking about 20K, but I guess 15K is fine. On the other hand, I went for 2x my projected annual dividend income. In 2022, I had a little over $300 in yearly dividends projected. So for this year, I want to double that, $600 in yearly dividends. I believe it's doable if companies remain at current valuations and continue increasing their dividends. And last but not least, I want to high grade my portfolio. By high grading, I mean picking companies of high value that could help me reach my long-term financial goals. I'm looking for companies with pricing power, growing earnings, and growing free cash flow. Overall, I'm looking for strong businesses. Those are my goals for 2023, and I'm excited to see what this year holds for the market and my portfolio. Talking about high grading my portfolio, I made some changes. I completely sold off of my positions in Corning and Archer Daniel Midlands. For Corning, I felt that for being a tech company, I could invest the money into a more scalable business with a stronger moat and business model. The stock has been performing well despite the volatility. I sold off the position with a return of 2.23% without counting dividends. This is a 4.88% allocation, which is around 14 shares, and I got $507.60 in buying power. For Archer Daniel Midlands, the company was bringing a growing revenue. They had pricing power to adjust to inflation and a very low payout, but the growth of the free cash flow was all over the place. The same with the shares outstanding. Having a low payout means they have room to increase the dividend, but the increases were very minimal, so I just sold it off completely. This position was a small one in this portfolio, 2.30 shares, 2.02% allocation, and made a return of 18.9% without counting dividends. From this position, I got $198.87 in buying power, giving me a total of $706.47. This buying power was used to start 2 new positions in my portfolio, ABBV and Texas Instruments. ABBV is a publicly traded pharmaceutical company based in North Chicago, Illinois. It was spun off from Abbott Laboratories in 2013. The company is primarily focused on developing and commercializing pharmaceuticals products in areas such as immunology, oncology, and virology. With a net income of 12% and a free cash flow of 14% in the last decade, this company is a cash-making machine. Now, being a pharmaceutical has its risks, limited time patents, a lot of R&D, and possible lawsuits depending on the effects of their products. I'm willing to take the risk for this investment. Texas Instruments is an American technology company that designs and manufactures semiconductors, which are electronic components used in a wide range of products including smartphones, automobiles, and industrial equipment. This company is also a cash-making machine, with a net income of 17% and a free cash flow of 7% in the last decade. TXN is one of the top semiconductor companies, and as we move into a more technological world, the demand for semiconductor is increasing. So there we have it, 2 new holdings to the portfolio. We still remain with 20 holdings overall. Over the long term, I believe these 2 new positions with my other holdings will take my portfolio to a new level and achieve the goals of this year. So that will be it for today's episode. Make sure to subscribe, like, and comment. It helps the channel grow. This is Dividend Dashboard. Till next time.